Hi friend, this is Mahesh here and welcome back to our channel once again. If you are new to the channel, don't forget to hit the subscribe button and select the bell button and select the all. So whenever we upload any learning video, you will get the quick notification. So friends, today we are going to talk about the HDFC and HDFC Bank merger. So HDFC merger with HDFC Bank, is it going to be the biggest bank ever? What happens when two giants decide to merge together? Well, they become super giant when they are merged. And something like this is about to happen in the market, where the mortgage lender Housing Development Finance Corporation, which is HDFC Limited, and HDFC Bank Limited are about to merge together. Yes, as soon as this unexpected news reaches the market would be filled with positive vibes all around. As soon as this news came in, not only HDFC Limited and HDFC Bank Limited share prices shoot up, but the optimism and the confidence was even seen in the Nifty as well as Sensex too. No wonder these two are in 2% that day. Let us see why this merger is happening. What are the pros and cons of this merger? Is this banking sector really under any pressure, or is this the right time to buy an HDFC stock? Come on, let's see some recent figure of HDFC. According to HDFC Bank, as of March 31st, 2022, its advances grew 20.9% year-on-year basis and 8.6% on sequential basis to Rs 13.69 lakh crore. Deposits of the bank grew 16.8% year-to-year and 7.8% sequentially to 15.59 lakh crore. So now the growth in HDFC Bank deposit is best in 5 quarters and the rise in advances is the highest in 7 quarters on the year-to-year basis. According to the bank internal business classification, retail loan grew around 15% over March 31st, 2021 and around 5% over December 31st, 2021. Commercial and rural banking loans rose around 30.5% and around 10% over the 31st December 2021. Its corporate and other wholesale loans rose around 17.5% over the 31st March and around 11.5% over December 31st. After its merger with its parent company, HDFC Bank will become a powerhouse in the Indian banking industry. After this merger, HDFC Bank will also be able to create its housing loan portfolio and will also be able to increase its existing customer base. That's the very plus point, because of which the chairman of HDFC Bank, Deepak Parekh, has said that this transformational merger is a merger of the year. Board has said that because of RERA, that is called as RERA, and many other government initiative and implementation, now the housing finance business will soar greatly at greater price. They said that HDFC Bank merger will mitigate the single product risk, enhance diversity of asset of combined entity. The combined entity will be in position to offer mortgage products seamlessly versus current assignment route. After this merger, the public shareholders will own 100% shares of HDFC Bank. Beside, the existing shareholders of HDFC Limited will have 41% of stake of HDFC Bank Limited. According to HDFC, its shareholders will get 42 shares of HDFC Bank for every 25 shares of the non-banking lender held by them. Where this merger is seeming to be transformational, on the other side, it is somewhere even pointing out to the unprecedented growth of the banking. So, is the merger happening because the board members do not force any such growth in the banking sector in nearby future, or they are feeling that their profits in the banking segment may fall in coming days? Now the question is, should you invest in HDFC? After the news about the merger, HDFC grew by 14% and HDFC Bank by 10% around. It's pretty straight that company is reducing its operational cost through this merger, and by doing this, their profits are going to grow in the future. All analysts are giving a positive signal to this merger, and their opinion is it is a win-win situation for its shareholder. Going by the words of one of the analysts, or you can say, the merger will be more beneficial to HDFC Limited since it has a lower profitable business, and with HDFC Bank, it can increase its product penetration. Someone said, While the markets have given a euphoric reaction to this news, we believe that the earnings of HDFC Bank could be downgraded in the near term, and the onus will be on the management to prove the upside of the merger through the operating performance. If you wish to include HDFC Bank in your portfolio, then you should do the fundamental and technical analysis of this once again. HDFC is a profit making company, no doubt, but an investor can earn the profit only when he or she do the entry at right time. So please check before making any investment if it is the right time to enter or not, and do the investment only on that basis. If you already have this stock, then according to the maximum analyst opinion, we can say such shares should be purchased when they are in dip. It's still unknown what blast would this merger do in the future, but the blast it has already made in the market and truly appreciable. Suddenly the times in the market are changed, condition change, and also have changed the intention and the portfolio of every investor. Even after this huge growth in HDFC Limited and HDFC Bank, we already saw the correction. So maybe you can see the different levels that we mark on the chart, and you can find out the best entry for your portfolio. No doubt, both the stocks, basically after the merger, this stock will become a best stock for your portfolio. But again, I am saying that do your own analysis and take the decision wisely. Thank you, friends. Thank you.